Thank you so much for joining us on Business Incorporated. I'm Ini John McCall. Let's start with market numbers on the African continent, where stocks traded were largely in the green. The South Africa's JSE index was the only decliner, down 0.13%. Meanwhile, NGX main index rose 0.11%, while Egypt's benchmark index was also up 0.17% at intraday. Kenya closed yesterday's trading session positive. And over in the Middle East, Abu Dhabi was not looking very good at intraday. It had already shed 0.75% of its all share, while Qatar lost much less at 0.36%. On the positive side, Dubai index did well, adding almost 1%, while Saudi Arabia came far behind with an increase of 0.12% added to its all share index. And in Europe, stocks pulled back today as global markets react to the Federal Reserve's signal that rate hikes will come sooner than expected. Well, we have Chelsea joining us from Frankfurt to tell us more about what's going on in Europe. Hello, Chelsea. Good afternoon.
Good afternoon.
Yeah, the Federal Reserve signaled it will raise interest rates sooner than earlier expected. How's this going down on European markets?
Well, European investors have actually taken this news from the Federal Reserve pretty well. We did see stocks fall a little bit at the open following the U.S. Stocks falling as well, but they've recovered a bit, and now the DAX here in Frankfurt is basically flat. So investors do need to be on the lookout for higher U.S. interest rates, which could put the European Central Bank here in Frankfurt also under pressure to raise interest rates. But for now, there's still a lot of optimism among investors that monetary policy is going to stay accommodative for quite a while. The Federal Reserve says they probably will raise interest rates in 2023, but even so, interest rates are going to remain below 1% for the foreseeable future. So that's still quite accommodative. And of course, there's still a lot of open questions about how the coronavirus is going to develop, how the job market in the U.S. is going to develop, and how inflation is going to develop. So for now, investors are taking this quite well.
Well, thank you for that. Well, shares in German biotech company COVAX plunged 50%. That's a lot after reporting its COVID-19 vaccine missed its efficacy target. What does this mean for the company?
It's a major blow for CureVac, potentially a fatal blow for the company. CureVac had been one of the most hyped up vaccine makers at the beginning of this race for a vaccine, so much so that the U.S. administration, the Trump administration, had actually tried to get them to move to the United States and exclusively give the U.S. their vaccine. That didn't work out, but there was really a lot of fanfare around this vaccine, and it just hasn't proved to be very effective. They've said that their vaccine was about 47% effective. That's far below the rates that Pfizer and BioNTech and Moderna, which have reported over 90% efficacy for their vaccines. And it's unclear yet what's going to happen to CureVac. They had been scheduled to supply about 400 million doses to the European Union as well. They were seen as a good contender to supply vaccine doses to the developing world because this vaccine doesn't have to be stored at sub-zero temperatures like other mRNA vaccines. So there was a lot of hope riding on this for not just Europe, but for the rest of the world. And so now that's all up in the air until we get more clarity on whether this vaccine actually will be approved by regulators.
Yeah, well, we hope that clearance comes really soon. And new data confirms that inflation across Eurozone was slightly higher than what the European Central Bank projected. What drove that?
So much of the increase we're seeing in prices here in Europe, in the United States, really in most of the world, is being driven by energy prices. So we've seen oil prices, for one, really rally this year as economies have reopened, as demand for oil has recovered, and that's led to higher prices for consumers, things like gasoline, diesel, the prices for heating your home, all of that's gotten more expensive, and that's really the major contributor to inflation right now here in Europe. Europe as well. There are other things putting pressure on prices as well, things like supply chain disruptions, as well as just the reopening effect. As there's suddenly more demand than there is supply, businesses are having trouble ramping up to the level of demand that there currently is for their services. So that did drive inflation about 2% higher in May in Europe. But if you exclude the energy price factor, it would have only been about a 1% increase in inflation. So much like the Federal Reserve, economists, investors, central bankers here in Europe say that they're not too concerned that this is going to be a long-term rise in pricing pressures.
All right. We hope it doesn't stay long, too. Thank you so much, Chelsea, and enjoy the rest of your day. Well, from Europe to London, where we have Juliana in our studios over there in London. Juliana, good afternoon. Once again, we're here together.
Good afternoon, busy Annie.
Well, there's a new cooperative framework for large civil aircraft between the US and the UK. What info do you have about this agreement?
Well, it's a little bit complicated because the trade dispute was complex. In fact, it was one of the longest-standing trade disputes at the World Trade Organization, involving predominantly the US and the EU over what they considered unfair subsidies for Boeing or Airbus. The big news this week is after the kind of rallying G7 gathering, Ursula von der Leyen and Joe Biden were able to cut through this tense communication, and it does appear as if this large craft dispute is going to be coming to an end after 17 years. This will affect Britain, which is why today the US government and the British government have released a joint statement as saying that for at least the next 5 years, companies that were unfairly penalised under this dispute, because it got so tense, both the US and the EU, because of course Britain was once a member, they started adding tariffs up to 25% on particular products. So they've decided to join a working group where they will be having discussions. Unfair tariffs such as the 25% put on a single malt Scotch will now be lifted. But yes, it is very complicated. I have read a part of the text that was released by the British government, but at least it is a sign that relations, transatlantic relations, are getting much closer under a Biden Boris Johnson regime.
All right. And I know Ladi would have loved to have this conversation. The UK crypto assets ownership has surged 21% to 2.3 million. And this is in spite of warning by Financial Conduct Authority that consumers should be prepared to lose their money. Are these guys Jane Z, or are there other people joining them now?
Yeah, it's an interesting story. The only issue with this report is it's heavily backdated. It was conducted in January, when I believe lots of people who had invested in Bitcoin were celebrating because it had hit record highs. As you know, because I know you discuss it extensively on Business Morning, Bitcoin has had a pretty volatile couple of months. In fact, this forms part of the discussion we'll be having on Channel's Business Global tomorrow. But, you know, whether or not central bankers like it or not, people love Bitcoin. They love cryptocurrency. It does show that more Brits are invested in cryptocurrency. Andrew Bailey, the Bank of England governor, has been emphasising, and he has always reiterated and stated, do not invest in cryptocurrency, don't invest in Bitcoin, especially if you don't understand how it works. And many people don't, Innie. A lot of people don't understand how it works. A lot of people do think it is real money. And so that's one of the worrying concerns. Also, part of this research did show that 14% of those individuals, those 2.1 million people who are investing, have borrowed money to invest in Bitcoin. And of course, as with anything you invest in, you've got to be prepared to lose all of that money. But if you've borrowed it, that's not really a wise choice.
Yeah, not a wise choice at all. Well, the FTSE was down this morning. How's it doing? How's the market doing this afternoon?
Still in the red, as you were discussing with Frankfurt there, lots of jitters and anxiety about the prospect of interest rates, which are pretty low across the world, rising because of this upward trajectory we're seeing with inflation all across the world. There has been a little bit of chatter amongst the British Transport Secretary, Grant Shapps, about whether or not any adults that have had 2 COVID vaccinations will be able to have a holiday this summer. Brits do love their holiday. The weather's not always fantastic here, so that's really moved markets. Even though the FTSE's in the red, a lot of the travel-related stocks, including TUI, the BA owner, IAG, are all up at intraday. So the FTSE All-Share is down, though, 0.55%. The FTSE 100 is also down by 0.57%. And the FTSE 250, the domestic market, down by 0.49%. In currencies, the British pound is down against the US dollar by 0.32%, up on the euro by 0.22%, and down on the Japanese yen at intraday by 0.28% in E.
All right, thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
Well, moving on now, shares in Asia Pacific were mixed in early trading today as investors watched for market reaction after the U.S. Federal Reserve moved up its timeline for rate hikes. In Japan, the Nikkei 225 fell 0.93%. The Topix index dipped 0.62% to finish the trading day, while South Korea's Kospi closed 0.42% lower. Mainland Chinese stocks, on the other hand, closed higher as the Shanghai Composite gained 0.21% and the Shenzhen Components advanced 1.23%, while Hong Kong's Hang Seng Index rose 0.1%. The S&P AX 200 in Australia fell 0.37%. And in the U.S., stocks fell in early morning trading after the Federal Reserve raised inflation expectations and forecast rate hikes as early as 2023. Futures on the Dow Jones Industrial Average dropped 121 points, while the S&P 500 futures and NASDAQ 100 futures were also trading in the negative territory. U.S. stocks fell during yesterday's regular session after the Fed's initial statement and economic projections. Well, on our discussion now, we are talking about Gari, the grainy flour obtained by processing cassava, and is a staple food in Nigeria and many West African countries. As a byproduct of cassava, it's expected that the price of Gari and cassava are positively related, and yet sometimes it doesn't seem that way. That's why Favor Oguniroyi joins us now to talk about it. Favor is a research analyst with Financial Derivatives Company. Hello, Favor. Good afternoon.
Good afternoon. Thank you for having me.
You're welcome. Well, the price of Gari has risen by 42% to 18,500 naira per 50 kg in the last 12 months, while the price of cassava has risen by 60% to 57,000 per ton. One would have expected that both commodities will record equal price changes. How do we explain this?
Food inflation is at 22.28% now, and we've seen that the price of many commodities have increased at a faster rate than that. And in the case of Gari, the reason for that increase would be that the raw material itself, which is cassava, the production has been hampered by increased insecurity that we're seeing in the nation now, and also climate change issues. So the less rainfall that we witnessed in the last year has affected the yield on cassava. And then now looking at the linked commodities, cassava and Gari, we saw that the price of Gari is also increased at a slower rate than the price of cassava. And several things could be responsible. And one could be that cassava is a raw material which has to be processed to derive certain things such as cassava flour or cassava starch and even ethanol. And so apart from the fact that it's a byproduct for Gari, we also see that there is high demand for cassava. And apart from the fact that there is high demand for it, as a raw material, cassava cannot be substituted as compared to Gari, which is a processed commodity, and it also has substitutes. So we guess that's the reason why there's that big price differentiation between the two commodities.
Okay, so as we see increase in the price of Gari, we also see increase in the price of the substitute. But do you see the substitute taking the place of Gari in the nearest future?
Normally, when the price of Gary should increase, people would, consumers will switch to the substitute, just like you said, and then that would reduce the demand for Gary. But then the fact is that presently there is an increase in the price of most commodities right now. And while that is happening, income levels are either flat or even declining, or they're basically not increasing. So what's left, what in long term, what consumers can do is either cut down the spending on non-essential commodities so that they can afford Gary or the substitutes, or they might even be forced to reduce the consumption of Gary and the substitutes. And when there's that reduction in consumption and demand, manufacturers will most likely, they will not be incentivized, and they might have to cut down on supply as well, and that will affect the price.
So does Gary have export potentials, or is it just for us here in Nigeria?
Talking about export potentials, definitely exporting the raw material itself, cassava, is one thing, and that's a huge advantage for Nigeria, considering the fact that we are the largest producers of cassava globally. So that's huge chunks of revenue right there. And apart from just exporting it for people who want to produce Gary, there are so many uses of cassava, just like I mentioned earlier. And there's also the potential that Gary can be exported to Nigerians in diaspora. And talking about that population size, that's huge. I'm talking about like millions of people. So, and there's the fact that getting these local or African food abroad is quite pricey. So there's that opportunity there to export Gary in order to take advantage of that.
Yeah, I'm sure a lot of Nigerians are already doing that, exporting Gary to maybe their friends and families, just to make it a formal industry and capture it into the economic data. Well, thank you so much, Favor, for sharing your thoughts with us this afternoon.
Thank you for having me.
So we move on now. The International Monetary Fund expects Zimbabwe's economy to grow 6% this year, almost double its initial projection of 3.1%, adding that debt restructuring and other reforms were needed to create the conditions for a lasting recovery. In a statement, the financial institution says higher agricultural output and improved power generation, as well as manufacturing activity, are contributors to Zimbabwe's economic recovery. However, the IMF calls for durable macroeconomic stability, structural and transparency reforms. It adds that any financial package will require a comprehensive restructuring of Zimbabwe's external debts, including the clearance of arrears and obtaining financial assurances from official creditors. And 8 more member countries of the Common Market for Eastern and Southern Africa have signed a solemn commitment to establish a single African air transport market. The COMESA countries, which are the Democratic Republic of Congo, Egypt, Ethiopia, Kenya, Rwanda, Zimbabwe, Zambia, signed the agreement following the initiative led by the African Union through the African Civil Aviation Commission. According to the agreement, the single African air transport will allow all participating countries to lift market access restrictions for airlines, remove restriction on ownership, grant extended air traffic rights, and liberalize flight frequency and capacity limits. Another objective is to harmonize safety and security regulations in aviation based on International Civil Aviation Organization requirements. And a 1,098-carat diamond, believed to be the 3rd largest gem quality stone ever to be mined, has been discovered in Botswana following a joint venture between Anglo-Americans De Beers and the government. The stone, measuring 73 millimeters long, 52 millimeters wide, and 27 millimeters thick, was presented to the president by Diamonds Company, acting MD Lynette Armstrong. According to Botswana's Minerals Minister, due to the easing of travel restrictions as diamond sales had been impacted by the COVID-19 pandemic, he adds that the government receives about 80% of its income from the sales through dividends, royalties, and taxes. And Uganda's imports from Tanzania, its strategic trade partner, doubles in April, signaling an increased dependence on East Africa's 2nd largest economy. According to the Bank of Uganda monthly performance report, the country imported goods worth $125 million, representing an increase of 25% in April. from $92.9 million worth of goods imported in March. Uganda leading imports from Tanzania include machinery, agriculture products, and medicines. However, the two countries have had trade challenges in the last 2 years, while Tanzania blocking some of Uganda's exports, including sugar. And that's it on the program for this afternoon. Thank you so much for watching. I'm Ini John Mekwa.